Today we're going to talk about variances. Let's look at material variances first. There are two different variances that we need. We need a material price variance and a material quantity or usage variance. And this is going to use different pieces of information. So let's look at exercise A to get started. It says, during July, the cutting department completed 8,000 units of a product with standard cost of 2 square feet per unit at $2.40 per square foot. So we need to first figure out the information that we need. So from that first sentence, we know that we have units produced equal to 8,000 units. We have a standard material cost. This is what our goal is for our material cost. It says 2 square feet per unit at $2.50 per unit. So we'll add that in here. Then it says the actual material cost consisted of 16,400 square feet at $2.20 per square foot. And then they actually gave us the total cost, which is nice because they won't always give you that in the problems. So you would just have to multiply the two together to get the total dollar amount. Then it tells us the actual materials used were 16,160. We need that information as well. We have to calculate both the material price and quantity variance. With the material price variance, we want to look at the materials that were purchased. We want to focus on just what was purchased. We're going to compare the actual cost of what was purchased to the flexible budget. And remember from the previous chapter that a flexible budget is the actual quantity at the standard or budgeted rate. So we need our actual cost. The actual cost from the information we said was $36,080, which we got from taking the 16,400 square feet at $2.20 per square foot. If we multiply those together, we get $36,080. For the flexible budget, we want the actual quantity purchased. The actual quantity purchased, if we go up here to our materials purchased, we see that the quantity was 16,400 square feet. So we need that. And we want to multiply it by the standard price. So we're going to go back to look at the standard. And the standard is $2.40 per square foot. Notice how the quantity is the same because what we're analyzing is the price difference. So the quantity is the actual amount and will be the same for both. The only thing that's different is the price. If we multiply the actual quantity times the standard price, we get $39,360. Now, we compare these two numbers. So we're going to just subtract these two numbers. A couple of things about variances. First, never ever show this as a negative number. You always show this as a positive number. You will indicate with a F for favorable or U for unfavorable if it's a good thing or a bad thing. So in this case, the amount that we have is $3,280. That's the difference between these two. Since my actual cost is less than I budgeted, I paid $220 per square foot instead of $240. That would make it a good thing or a favorable variance. So I would put the variance in here with a positive number for the dollar amount and then favorable because it's favorable, right? Because this is nice that we spend less than we had planned. Now we move on to the material quantity or usage variance. In this one, we are going to use the materials used, not the materials purchased. It's very important here. We want the materials used. Since we are looking at the quantity used, we are going to compare the actual quantity to the standard quantity. Notice the price is going to be the same, and the price will be our standard price. So the actual quantity used, it told us the actual materials used this period were 16,160 square feet. My standard rate is $2.40 per square foot. We know that because it says it in our standard up here, and we pulled that information out so that we could keep track of it. If we multiply those together, we will get 38,784. Now we move over to the standard. The standard wants a standard quantity times the standard price. There's a couple of ways you can do this. This can be very confusing. The standard quantity uses the actual units produced. So we're going to start with the number of units produced. So we have 8,000 units. Then we have two choices depending on the information that's given to us. In this case, they say it's 2 square feet per unit at $2 per 40 cents. But if we multiply those two numbers together, we get $4.80 per unit. So we can do 8,000 units times $4.80 per unit, or we could do 8,000 units times 2 square feet needed per unit times the $2.40 price per square foot. That is our standard. Either one will give you the same result, right? So either way you do that is perfectly fine, and we will get 38,400. When we look at this, we can see that the flexible budget is just slightly more than the standard. So it's just slightly more than the standard, and with that being the case, that means this is going to be an unfavorable variance because the actual quantity I used was greater than what I had planned to use. So the difference is $384, and it is an unfavorable variance. Stay tuned. Next, direct labor variances.